my channel. Saturday, November 21st, 2020. Today I'll be discussing my financial journey and the other ETF that I'm currently invested in, which is the Vanguard VXUS. This ETF tracks the total non-US stock market, so every country other than USA. So this tracks Canada and every major stock in the rest of the world, basically. So you have Europe, we got the emerging markets, China, Thailand, Vietnam. They're all in this stock, and this stock tracks the every company outside the USA. But even though it says it's non-US companies, there are US companies in these countries that still invest in those countries. So you're still getting the American influence and the returns. But the US stock market is the biggest stock market in the world. It controls 35% of the total world economy, and stocks is in the USA. So that's why every single country on the planet has their funds in the US stock, in the New York stock market. So you got China, Russia, every country on the planet, their funds, even the new EVOs, the NEOs, and the XPeng, all these companies that are Chinese companies in China, they're still their stock is still traded in the U.S. stock market. So let's get to it. VXUS is the total VXUS is the total stock market, not including USA, but Canada is also included in this fund. So as of Friday, November the 20th, if you want to buy one share of this stock, that would cost you $57.53 US. These are all US dollars. Everything's in US dollars, but they run the world right now, so they get to choose everything basically. So one stock is $57.53 US to buy one stock. So if you can buy one stock at that price, you're invested in the every single company outside of America stock market. And each month or whenever you're able to, just like the VTI ETF I also currently have. They say that because the U.S. stock market is the largest one in the world, and if you have some experts that say you don't need to invest in the international stock market, because when you invest in the U.S. stock market, the total U.S. stock market, and because the U.S. companies are all over the world, you're already invested in the international stock market. You don't need international, but you have other experts who also say that those smaller countries that you call them emerging countries that are coming up right now, who knows, in the next 10, 15, 20 years they could be the next dominant force. America could be going down, and you have other countries in that part, like China, coming up pretty strong. You got China, you got other countries that are stepping up and are putting out amazing companies and products. They may be the ones dominating the next 10, 15, 20 years. You never know. So it's best to have covered in all areas. Now the risk potential in this stock is at a 5. So this is the highest risk you can have out of any stock or any fund in the stock market. And the reason why it's so high is because when you deal with other countries that have they don't have stable economics, they don't have stable governments. You have governments that are over there that aren't democratically elect. You have coups all the time. You get governments overthrowing other governments, and all those things affect the stocks. It affects the country. It's volatile. So when a certain area or companies are volatile, it's higher risk. So that's how it is. But I have these two funds. I have the Vanguard VTI, which is the total U.S. stock market. I have the Vanguard VXUS, which is every other stock in the rest of the world. So you have those two funds in your portfolio. You're invested in every stock on the planet. And how can you go wrong with investing in every planet? You're covered for everything. If US goes up, you're making money. If Europe goes up or the rest of the world goes up, you're making money. If US goes down, Europe goes up. So you're covered everywhere. So like I said before, unless every company in the world goes bankrupt and goes out of business, your fund and your money is pretty much safe. I'm not a financial advisor. I'm not giving you financial advice. This is just my journey. This is just my, you just come along with me for my journey. And I'm just letting you know what I do with my investments. So do your own research. Don't listen to me, what I'm saying. This is what I'm doing. If you have questions, shoot me a message and I'll respond to your messages. If you want me to research for you, send me a message and I'll research it for you. So let's get back to it. Like I said, this is a rated 5. Let's check the. When you look at the American stock market, in the Vanguard VTI, 1 year was giving you like 11%, I believe. 5 years was giving you 14%. Since inception, you're looking at about 7.5%. But when you look at the international stock market, it hasn't done too well compared to the U.S. stock market. After 1 year in this fund, your return is 3.82%, which is, it's not as good as the U.S. stock market, but still 3.8% is better than nothing. After 3 years, you're looking at currently 1.28, which is still pretty low. But the fund you bought, the amount you paid for this fund is $50 basically. You buy the U.S. stock market, you're looking at $183. So you're paying, this is like, a quarter of the price, less than a quarter of the price what you're paying for the VTI. So you're not going to get the same results. But like I said before, it's good to invest in the total U.S. stock, total international market. You never know when a diamond in the rough is going to appear over in Europe there, and you see a company take over, and all of a sudden now because you got in early when it was cheap, you're going to reap rewards later on when it's expensive. See, when you deal with in the stock market, in ETFs, index funds, any kind of thing you do in the stock market, everybody wants to get in early when it's cheap. Before when it was worth nothing. Like if you bought Tesla, you could have bought Tesla a few years ago for $2 a share. Now Tesla costs what? Is it $4,000 a share? So the key for most investors, the key for every investor is they want to get in early when it's cheap, watch it explode, and one stock can make you a millionaire. You buy one stock, $2 a share, $1 a share, when it seems like it's going to go bankrupt. You hold on to that thing for 10 years. 10 years, you're a multi-millionaire. You never have to work again for the rest of your life. That's why everyone that's in the stock market right now. Everyone's in the stock market right now is to get rich quick and get crazy rich. And the only way you're going to get crazy rich or well off in today's society is investing. Everyone who is, from the day you're born, you're investing. You don't know you're investing. From you started working, you're investing. Just some of us invest in liabilities, and some of us invest in assets. You got your first job. You weren't thinking about saving nothing. You're thinking about my first job. I'm gonna buy a new car. I'm gonna go shopping. I'm gonna buy this new bag. I'm gonna buy new jewelry. I'm going on trips. Those are all investings. You're investing in yourself, which is not paying you nothing, because those are all meaningless investments. You buy a car, it depreciates, you're losing value. You're not making money. For the same amount of money you bought for that car, you invest that in the stock market. You could have bought Tesla stocks. You could have bought Amazon stocks for $10,000 like 10 years ago. At 10 grand 10 years ago, you're already a millionaire. You could have bought as many cars you want after that. You could have bought a Lamborghini if you wanted. But most of us, when we get paid, we get our money, we're not thinking of the future until the future is upon us. And then all of a sudden it's important to think about the future. And by then you've already wasted half your savings, your potential earnings over the last 20, 30 years. It's all gone. Now you're older now. You got no savings. You can't work forever. You got to plan for the future. So I've always been a saver. I've always been an investor. Just now I'm taking it more seriously now, to tell you the truth. So that's why I'm in the stocks. I've been in the personally I've been in the stocks through my company for like 30 years. So, and then that's index funds through my company. So I've always been involved in the stock market. It's just now, this is my personal, outside of work, this is my personal financial journey. So I can pass on to my kids, my grandkids. We all want better for our family and our kids. So back enough of me rambling on here. Back to the portfolio here. See what we got here. Here, the portfolio composition of the VXUS total international stock market. And here they got emerging markets. In this fund, it's got this ETF has all the large cap companies in Europe. So you have all the companies in Italy, England, all the European countries. 80% of this fund is in those countries. Now, if you go into the emerging markets now, there are smaller companies like the Philippines, even China, even though it's a big country and second largest economy in the world, they're considered an emerging market. So you got 26.4% in the emerging markets. You got 38% in Europe. You got 28.8% in Pacific. And then Middle East, you got 0.3% in the Middle East. I guess the Middle East hasn't all the only thing in the Middle East right now is oil, and oil is losing value daily. So there isn't much invested in the Middle East. You got 6.2% in North America, and you got 0.7% in other countries that are coming above. Now, if you look at the top 10 holdings in the VXUS total international stock market, you got Alibaba Group, that's in China, and they're like the Amazon in that part of the world, in Asia, Alibaba. You got Tencent Holdings, which is another Chinese company. So it's heavily, you got Taiwan Semiconductor Manufacturing. You got Nestle. Even though Nestle is a European, it says Nestle is a, international company. Nestle is an American company, I do believe. They make chocolates and stuff. You got Samsung Electronics. Samsung is a Korean. You got Roche Holdings. I'm not sure where they're from, but you got Roche Holdings. You got Novartis. You got Toyota. You got ASML Holdings. And you got Unilever. Those are the top 10 in this fund. So that's and the expense ratio for this fund is 0.08% of whatever you have in there. So $10,000. I believe that's maybe $80 a year out of $10,000. Like I said, you pay more than that in 1 year for your banking fees, and that gives you no benefit at all other than making the banks richer. And that's it for today. That's it. Short and sweet. Next time I'll probably discuss other assets that I have involved in the stock market, dividends. Next we'll talk about dividends and what is a dividend and how do you invest in dividends. All right. Thank you. Stay safe. Yeah.